Sandeep Bhatia is with us, Managing Director, Head of Equity India, Macquarie Capital. Sandeep, great to have you with us here. Thanks very much for your time. Your view broadly, and I'm just paraphrasing or just summarizing your view, is that you've been a little cautious at the margin, right? On the back of a bunch of things. And it's kind of borne out because as far as individual stocks go, something here and there is always there. But at a broad level, the feedback is, people have not really made a lot of money. Over the last 3 months, 6 months, maybe even 1 year, we've been kind of flattish. Do you think there is more time correction ahead of us, or you think, ingredients are coming into place and we perhaps in short order should reverse some of this negative sentiment? What's your sense?
Yeah, I would agree that we're still in the slow burn phase of this market. I think the GST cuts which have been announced are welcome. I would actually believe that the GST cuts will do more benefit for the economy than the income tax cuts which happened in the Feb budget, because the GST benefits a wider section of the population. It's around spending, and it's not necessary that some of the income tax savings will be spent. They may be saved. So all told, GST move is actually better than the income tax cut. But if you see the current picture, we are in the Shraddh, Pitru Paksh. So I think consumption will still broadly be weak till 21st of September. So this quarter is not going to be good. While we saw last quarter come with good GDP growth, we'll see actually a downtick in terms of the number from the high that we saw in the previous quarter. So all told, it's still a slow burn. The only thing I can visualize is a good festival season. And if we see that, I think October to December markets will see another rally. But on the whole, we are still on high valuations. We still face uncertainty on tariffs from the US. We also are in a very geopolitically volatile region. We saw what happened in Nepal yesterday. So all told, it's still a slow burn.
Okay, slow burn. So still have to be a little cautious. Take that point. But Sandeep, I really want to congratulate you on the call you made on autos. And I remember, I think we spoke very early in August, much before the Prime Minister's speech from the ramparts of the Red Fort. And you said auto as a sector is looking interesting. And at that point, your thought was more centered around the fact that we're getting rate cuts. So, maybe it gets people to go out there and buy. Since then, individual stocks are up anywhere between 15, 20, 25% in some cases in the last 1 month. So how much of the excitement and, this pop, how much of it is in the price? Or do you think the GST cut, because it's permanent in nature till the next round, or do you think that it really turns something, especially, say, for the passenger vehicle space, maybe for stocks like Maruti or Hyundai, which have been totally bombed out?
I would actually think that the GST cut in the auto space gives it a lot of legs. I also believe that eventually this small engine capacity cuts have to go. Now, whether it takes 2 years, whether it takes 5 years, I don't know. But GST in autos should be uniform across size of car and across engine capacity. Maybe that will take a couple of years before it comes. But in the near term, there is definitely a big impact on model cycle. I expect both Maruti and Hyundai to benefit from the GST cuts, and also from the fact that there is a model cycle impulse, which will drive people to the showroom, which will drive people to buy cars. So to that extent, all the three manufacturers, whether it's M&M, whether it's Tata Motors and Maruti and Hyundai, all of them will see benefits, and especially vehicle manufacturers which have new models coming in. I would definitely think that's Mahindra has benefited a lot from this. I would expect Hyundai and Maruti now to also come through in this on this pulse of new model and new launches.
All right. Hi, Sandeep. Good morning. And I also recall, on autos, you were positive. That's played out well. So good on you. The other, industry that you liked was the hospitality space. I recall us chatting the last few times actually about hotels. And there seems to be no let-up. A couple of conferences that I got a sneak peek into. I was, hearing those that are heading some of these hotel chains, and they are sounding extremely optimistic. Would you share their optimism? Or do you think after the recent run, you believe that, maybe, in fact, you're not as bullish as what you were earlier?
So structurally, we are positive on the hotel sector. I think now, in terms of valuations, as we are cautious with the market, we just have to think about valuations. If your holding period is more than 2.5, 3 years, then you can definitely continue to be extremely positive on the hotel sector. We have to look at what is the mix of new properties coming through, whether these are big capex investments or these are existing hotels which are taken over under management control. What's the capital efficiency of these new projects, and so on. So all told, I'll be positive, but not the kind of run which they have seen in the last 12 to 18 months. That needs to moderate.
Yeah. I mean, what runs very fast. What doesn't run is crawling, right? I mean, that's the two-speed state for the market. So, in terms of really out and out, down and out kind of spaces, if there are any, Sandeep, and typically that is the time to kind of sort of focus on it instead of trying to chase things higher. Anything left out there of interest to you?
It's a bit of a tired sector, but banks can actually do better. They have not been down and out per se, but they have not been the best in the last couple of months. I think we could see another rate cut. I think consumption is going to come back in this festival season. I think some of the banks will get their mojo back, and well-managed banks look interesting. So I think banks definitely look good, and especially in a geopolitically volatile world, export sector remains a bit of a question mark. So domestics like autos and to an extent banks and, as I said, hotels all look better placed on the whole.
Insurers, Sandeep, any thoughts?
Insurers, have to go through this margin hump in terms of the GST cut, input tax credits, and so on. So yes, I mean, longer term that's fine. But in the near term, there is this GST impact and input tax credit impact which you need to pass through.
Internally, just one last from my side, Sandeep. Internally at Macquarie, as a team, is there? What do you think? How long before we get a tariff truce with everybody's got their thoughts, theories, etc. But I'm just curious.
I'm not privy to what the White House thinks.
No, nobody is privy, Sandeep. Yeah, but that doesn't stop people from. It's all about looking ahead, right? So is it short-lived? Is it longer? What's your sense?
So, if you look at the political calendar, and I don't think people have forgotten that we have a very heavy political calendar in 2026, starting from elections in West Bengal and also in Tamil Nadu, which are two big important states for the BJP. I think they want to do this before March, because after that, the political calendar is extremely heavy with state elections. So logically, it should be between now to March that it should happen. But of course, the stars need to align, and things need to fall in place. But we because 2025 was a very light political calendar, and we have not had much impact. There's a Bihar election in end October, November. But other than that, we actually forgotten the politics. And I think to come 2026 and 2027, the state election calendar will be very important and will have an impact both on policy, will have an impact on the government's preoccupation.
Interesting, Sandeep, since you're mentioning about that. Mr. Modi has held its ground. He has said clearly he wants to protect everyone here in India, particularly the farmer community. So otherwise it would be easier, for India to approach United States, try to arrange a dialogue, because you don't know what Mr. Trump is going to do next. He'll put it out on X or some platform that, the delegation approached me, they really wanted me to give in. So I think it has to be handled very, very carefully, because you have a Bihar election that's, just around 2 months or so, less than 2 months away. So, a little bit of a tricky situation. Otherwise, a phone call from Mr. Modi to Mr. Trump could have been on the cards. I think that will have to wait a little bit, or a lot of thought will have to go into it because of the man we're dealing with, Mr. Trump.
Yeah, that's we never know. Just have to wait and watch. Never second guess what the White House is up to next. But two quick questions from me, Sandeep. One is, okay, let's take IT, and then I'll ask you the market question later. IT. Now, Infosys, we would expect the company, I think the market would be far happier if it was a very great tactical acquisition or something pro-growth. But what we've got is a buyback announcement. Would you look at buying IT stocks just because their at least the valuations are maybe more comfortable now and there's a cash play, there's a defensive play? What are your thoughts?
So we are cautious going into the near-term numbers for IT stocks. So you should have a 3-year time frame for IT. Then you can probably look at them. There's a lot of moving parts in terms of the US and whether it makes any other further moves. I don't expect actually. So I'm not in the camp that things will get worse as far as the Indian IT sector is concerned. But yes, I mean, you should, as I said, you need a slightly longer term time frame, at least 2.5 to 3 years.
Okay, so have a longer term time frame if you are venturing into IT stocks, traditional IT services, that is. Finally, Sandeep, the point on the market itself, and when we spoke earlier, you had a view that there will be this time correction lasting. Now that we have another big stimulus boost in the form of GST, where does that leave us with expectations of a bumper festive seasons, the earnings pick up, and eventually the market picking up? Where are we on the whole trajectory?
Well, where are we on the whole trajectory? If the markets were 10 to 15% down, then we would be at the cusp of a run. Because the markets are not down as much, though they've been burned on a slow burn path. It's a combination of whether we really see a big earnings surprise. And as I said, I don't expect the September quarter numbers to be a big earnings surprise. October, December festival season logically should be good, and I'm actually optimistic for a change on that front. But even then, whether we see that continue in terms of the tariff issue getting resolved with the US and so on. So we need a couple of, other than just the immediate GST earnings kicker, we need more stability on the economy and some good news on politics before the market can really see a big leg up. So yeah, it's where we are, and and we have to go through this next couple of months slow burn phase.
Yeah, absolutely. Sandeep, good chat, good conversation, and look forward to the next one. Appreciate your time here on CNBC TV 18. Thanks very much. So that is Sandeep with his thoughts on the market from Macquarie.